Joining me right now is Oxbow Advisors Managing Partner Ted Oakley. Ted, kicking things off with you with a market that is once again nervous over the Russia story and whether or not Russia is in fact pulling back troops. The U.S. says it isn't. How important is this for markets, and what do you make of the Federal Reserve minutes yesterday?
Well, I think on those two questions, I guess for us, we don't have a particular opinion on Putin coming in. I personally think he probably won't. But on the Federal Reserve, I think they have to say that because there's a bit of jawboning going on there. And I'll have to see what happens with them. But I would be surprised if they got to those 5, 6, 7 moves this year. That would really surprise us if that happened.
Surprise you because the markets will be reacting to it and the Fed will push back, or because you think that a couple of rate hikes will actually take down inflation?
Well, two things on it, Maria. I think, number one, when you see the curve flatten like it is here, and you go back to 18 or 2011, it didn't take long for that to change. I think they're raising those into a slowing economy to a degree. That doesn't mean it's going negative, but it's certainly slower than it would be in 21. And what we see on the consumer side is they don't have near as much money. They're starting to slow down on durables. We see a lot of things that are slowing already, and we just think they're raising and getting aggressive on yesterday's news. And that's our big problem where they are. We do think they could raise maybe once or twice, but after that, we don't think they'll go much further or could.
Yeah, it's an increasing conversation, actually. Stephanie Pomboy was with us yesterday and had the same sentiment, whereas saying the Federal Reserve is not going to be able to get all of these multiple rate hikes through. In fact, those Federal Reserve minutes yesterday from the January meeting suggested that the Fed is ready to step up the pace of raising interest rates, raising rates consecutively at every meeting, beginning with this upcoming March 16th meeting and a potential 50 basis point increase. So if the Fed has expectations of raising rates 6, 7 times, wouldn't it make sense to raise rates by half a point rather than a quarter point at this upcoming March meeting?
Well, I suppose they could go that direction, Maria. The problem is when you raise a half a point, because we haven't had that in a while, it sends a message that, hey, this thing is a lot worse than we thought it was, or something like that. Now, if they do it, I think that'll have a negative impact on things for sure, because it's a fairly large move if you think you're moving from a quarter to 3/4. So I'd be surprised they did, but I could see them doing it because they've made a lot of errors, and I don't necessarily believe them when they're doing something. So I'm probably in that camp.
Does 2% on the 10-year represent a barrier for you? We're down 2.5 basis points this morning, but the 10-year still sitting at 2.015%. And I know as rates have hit 2% in the past, growth has gotten hit. Amazon and Visa reached an agreement allowing Amazon customers to use Visa credit cards on Amazon's site and shops globally. Last year, Amazon told customers it would no longer accept the Visa credit card issued in the UK because of Visa's fees. But obviously, we've got an agreement here. What about growth? A stock like Amazon, does 2% on the 10-year represent a problem for growth? I know you like Visa stock, though, right?
Well, we do like Visa and Mastercard. I think for us on Visa and Mastercard, if you look at it, those are companies where their cash flow and their earnings are about the same. You don't have a tremendous amount of capital spending. And for us, for people getting out and moving again in the next 1 to 2 years, going worldwide, doing things, we think those two companies will weather the storm. Even if you have a slowdown, we think those two companies will do okay. I don't know what their relation is exactly with Amazon, but if I were Amazon, I'd probably take their cards as well, for that matter.
What about growth? Are you avoiding tech, big tech?
Well, no, we own it, Maria. I wouldn't say we're avoiding it. We're looking for the markets to break back some more. You look at the forward PE on the S&P; it's about 19.5. We think fair value would be 15 to 16 times, which would put you down another 15, 20% maybe. That's the point we would add to tech. We own tech now, but we've owned it for a number of years. It's hard to come in now, though, and just start some major positions on some of these companies because they're fairly fully valued. Doesn't mean they won't do well the next 5 years. I think you have a better entry point, though, at some point.
Yeah, well, there are great companies, and then there are great stocks in terms of when to get in. Ted, it's great to see you this morning. Thanks very much. Ted Oakley joining us.
Thanks, Maria.